Hello and good morning. Holly here reporting live from Kalkine Studio. Thank God it's Friday, folks. You're watching the opening bell. Let's take a look at how the Australian share market opened the trade session and today's key market drivers. To kick it off, the ASX opened lower as major Australian cities like Sydney and Melbourne battle another COVID-19 outbreak. BNPL and energy players pulled down the strings of the ASX 200. On Thursday, a measure of global stock markets slipped from near record highs as US dollar inched up while the bond yields traded lower. Investors are pondering the Fed's inflation outlook and upbeat assessment of the US economy. Wall Street slid to lower levels despite the four largest US consumer banks declaring blockbuster second quarter results earlier this week that have beaten analyst estimates. The number of people in America filing jobless claims benefits fell to a 16-month low last week as the US jobs market steadily gained traction. On the other hand, another set of data depicted that the import prices rose in June but might have probably peaked. And on Wall Street, the Dow Jones eked out of a 0.15% gain, but the S&P 500 slid 0.33%, and the Nasdaq Composite fell 0.70% as well. Meanwhile, US Treasury yields traded lower on Thursday to a one-week low. US Fed Chairman Jerome Powell testified before Congress for the second day, expressing that the surging inflations would probably be transitory and that the US bank would continue to support the economy. The benchmark 10-year yields fell 6 basis points on Thursday to 1.297%. Well, while looking at the Australian market open trades, BNPL players Afterpay and Zip trended lower due to a fear of competition from Apple's potential entry into the sector. Other IT players like Megaport and Altium also slid. Then Evolution Mining was the top loser despite increasing its 3-year gold production forecast to 900,000 ounces. On the other hand, Ingenia Group, Breville and Reece advanced, plus Fletcher Building and Champion Iron Ore also soared. Moving on, let's glance through the ASX sectoral charter for the day. While the Australian tech shares traded lower during the early trades, taking cues from the weaker action of Nasdaq overnight. Nasdaq ended lower on Thursday as it was dragged down by heavyweights like Amazon, Apple, and other big tech companies. A downtick in weekly jobless claims data spiked investor concerns regarding a recent inflation surge. And Nuix and Nearmap slipped while Altium and Megaport also slid lower. BNPL players Afterpay and Zipco continued to witness pressure amid reports that Apple Pay is set to launch a buy now, pay later product that will allow users to repay Apple Pay purchases in installments over time. Talk about tough competition for them. And meanwhile, Australian energy makers Beach Energy, Santos, Origin Energy and Oil Search traded in the red zone amid an oil price downtick. On Thursday, oil prices dropped by more than $1 per barrel on expectations of more supply to hit the market after a compromise deal between the OPEC Plus member countries. Brent crude fell 1.7%, while US West Texas Intermediate, or WTI, crude fell 2.2%. And now onto the miners space. Heavyweight miners BHP, Rio Tinto and Fortescue traded in the red, while ferrous futures in China traded higher on Thursday. The most actively traded iron ore futures contract on the Dalian Commodity Exchange closed daytime trading 1.6% up. Meanwhile, lower than expected growth from top consumer China increased expectations for more policy support from the world's second largest economy, resulting in higher copper prices. Despite favorable commodity prices, the ASX-listed copper players Oz Minerals and Sandfire Resources traded in the red territory during the early hours of today. Then in the yellow metal space, Newcrest Mining, Evolution, Ramelius and Gold Road edged lower, even though gold surged to a one-month high on Thursday. US Fed Jerome Powell's dovish comments and some concerns regarding a deceleration in the global economic recovery supported the gold prices. And now it's time for a short break, but stay tuned because I'll be right back with more updates for the Australian share market.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back from the break. I'm Holly, your host, live from Kalkine Studio, and you're watching The Opening Bell. Moving on, let's have a look at some prominent ASX stocks under the spotlight during the early trades. To begin with, Evolution Mining slipped despite increasing its 3-year gold production forecast to a 900,000 ounce mark. Not bad at all. Investment in sustaining capital is forecast between $120 million to $150 million in the financial year 2022, with major capital investments tipped between $440 to $510 million. Meanwhile, Crown Resorts remained under the spotlight post-releasing operational updates on its gaming and accommodation segments. The gaming and entertainment company announced that it had closed its Melbourne gaming, retail and dining facilities during Sydney's 5-day lockdown. Despite that, however, hotel facilities remain open. And next on the list of newsmakers is Rio Tinto, who slipped on updating their quarterly production dips. The iron ore player said that its iron ore production fell 9% in the second quarter from the corresponding period last year. The company expected iron ore shipments would be at the lower end of its guidance range. The mined copper and bauxite production was also expected to be at the lower end of the spectrum. And NZ is taking to the skies again as Auckland International Airport soared on serving higher international passengers. The major airline hub in New Zealand said that the international passenger number increased by a whopping 468% in June, after quarantine-free travel from Australia was permitted. And Eugenia Group rose on guidance upgrades. Leading Australian property group said that it now expects earnings before interest and tax to finish up 30% in the financial year 2021. And the next stock making headlines, AMP Limited traded lower. Australian Securities and Investments Commission announced it'll take no further action over its probe into AMP's fees for no service criminal conduct. The decision comes following consultations with the Commonwealth Director of Public Prosecutions. AMP acknowledges the deficiencies in its historic systems and processes within the advice business to monitor ongoing service fees in relation to the buyer of last resort policy. And next, Volpara Health Technologies was granted another patent by the European Patent Office. This takes the total number of patents to 98. Volpara is a health tech software company, and its integrated breast care platform assists in the delivery of personalized breast care. The current patent underlines the enhanced evaluation of numerous quantitative measures from low-dose images. It allows highly accurate assessment of a woman's breast composition at an early age. This helps with the calculation of the baseline risk of breast cancer. Also, the improvements will help to optimize medical workflow. Needless to say, very important work being carried out by Volpara, so hats off to the tech company. And now we've got the equity markets coming up, but first it's time for another short break. Stay with us because I'll be right back with more updates for the Australian share market.
New Zealand is unique, and Kalkine TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at Kalkine TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit kalkine.co.nz.
Welcome back, this is Holly, your host, live from Kalkine Studio, and you're watching The Opening Bell. Let's now zoom our lens on over to the currency market in the last leg of our show. In the Forex market, the US dollar had climbed in recent weeks. Market participants are taking stock of the Fed's increasing upbeat assessment of the US economy, which for some investors have brought forward the time frame for its next rate hike. Thursday's mixed US data featured jobless claims showing the number of claims in all programs fell to 13.8 million from 14.2. It partly reflects the termination of extended benefits in several states, but also the vast number of jobs available. And meanwhile, the Empire and Philly Fed manufacturing indexes surprised on the upside and downside respectively. Industrial production underwhelmed, with the microchip shortage hammering vehicle production and causing a 0.1% drop in manufacturing production. As of now, Friday features US retail sales and Michigan consumer sentiment and inflation expectations for July. Moving on, the Australian dollar struggled to keep up momentum, having failed to get any support from another set of upbeat jobs figures. Then the Canadian dollar fell 0.77% compared to the US dollar. The de-risking and further weakness in oil, as well as mixed views to whether the latest Chinese data points to a loss of growth momentum. In the crypto space, Bitcoin fell 3.3%, the lowest level since the 27th of June. It reached around the lower end of a month-long consolidation, as Dogecoin was down 4.52% and Ether down 2.49% as well. Well, that is just about all for now. We'll be bringing you more trending updates in our upcoming shows during the day, so stay tuned with Kalkine TV for more live market updates across economies, markets and sectors. Holly Shields signing off.